In this video, we discuss 6 high-dividend cheap stocks to invest in for under $10. High dividend yield may be attractive, but focusing solely on them can be risky, as extremely high dividend yields suggest financial distress within the company and should serve as a warning sign. However, historically, dividend growth strategies paired with high yields have performed extremely well. Investing in companies that consistently increase their dividend is a highly effective approach to harnessing the compounding benefits of dividends. Having said that, here are the 6 amazing high dividend stocks to invest in for under $10 in order from the lowest to the highest dividend. The first company is NatWest Group, NWG. It is currently valued at a hefty $35.5 billion and offers a tempting forward dividend yield of 5.3%. Formerly known as the Royal Bank of Scotland, this institution has a deep-rooted history that stretches back well before the United States gained independence. NatWest operates extensively across the UK and Europe and is a major player in financial services, specializing in mortgages, business banking, and investments. In comparison to leading US regional banks Fifth Third Bank Corp, NatWest is larger in scale, but it offers a stock price in the single digits, $7.94 to be precise, and a substantial sustainable dividend yield. If you are considering diversifying your portfolio internationally, NWG presents an intriguing opportunity worthy of your consideration. The next high dividend stock to talk about is Valley National Bank Corp, VLY. It is valued at $4.1 billion with an attractive forward dividend yield of 5.5%. The regional banking sector experienced some turbulence last year with the failure of high-profile banks, First Republic and Silicon Valley Bank. SVB's collapse was significant, ranking among the largest since the 2008 financial crisis, yet there has only been a handful of bank failures since early 2023. While Valley National Bank Corp is smaller and less capitalized compared to other regional players in the sector, it remains resilient in the face of market challenges. Despite fluctuations in its stock price, VLY continues to offer an 11-cent quarterly dividend, which is conservative relative to its earnings projections. So if you are a dividend investor looking for higher yields, Valley National is an appealing option as long as you can tolerate the risk and ride out the current market challenges. The next stock is LXP Industrial Trust. It is currently valued at $2.6 billion with an appealing forward dividend yield of 5.9%. LXP is a great pick for dividend investors because, as with other REITs, it has to dish out at least 90% of its taxable income to shareholders, which means steady income. The company mainly owns single-tenant industrial properties, with Amazon as its top tenant. Despite all the uncertainties in real estate, especially with the shift to remote work impacting office spaces, LXP's focus on industrial properties makes it a stable bet. Plus, with a nearly 6% dividend yield, you're looking at a nice return from this affordable stock. The fourth stock is Granite Ridge Resources Inc., GRNT. It's valued at $838 million and boasts a hefty forward dividend yield of 6.9%. As an oil and gas exploration firm, Granite Ridge Resources shows how smaller companies can be quite generous when energy markets align favorably. Granite Ridge owns a bunch of wells and land in the Permian Basin, which is a big deal in the oil world because it pumps out a ton of it. And with crude oil prices sitting around $82.60 a barrel, things have been going pretty well for them. Now, the big question for investors is whether oil prices will stay strong enough to keep the stock and dividend steady. Despite these uncertainties, the company has consistently paid out 4 consecutive dividends of 11 cents. That's a solid yield, especially since the company trades below $6 per share. This opportunity could provide you income while you monitor development in the oil sector. Up next is Telefonica S.A., TEF. It's a telecom giant based in Madrid, Spain, with a market cap of $25 billion and a pretty nice forward dividend yield of 7.4%. TEF stands out because it's not just about Europe. They're also big in Latin America too, especially with mobile data services that are still growing in places where Western markets are already saturated. They operate in 17 countries and have a massive customer base of around 343 million people, which means steady income from all those monthly bills. One thing to keep in mind though, is that TEF pays dividend twice a year in June and December. Even with that, the total annual dividend stacks up well against the best telecom stocks out there. Number 6 is Prospect Capital Corp, PSEC. The company is valued at $2.3 billion and offers an impressive dividend yield of 12.9%. This company operates as a business development corporation, making money from its investment portfolio. PSEC focuses on later stage investments like leverage buyouts and helping middle market companies grow. But lately, they have been feeling the heat because a big part of their game involves borrowing money. However, PSEC has been around for over 35 years, made more than 400 investments, and manages assets worth $8 billion. It's a unique way to bet on potential gains in the market. Plus, despite higher borrowing costs, PSEC has been paying a solid dividend of 6 cents per month since 2017, showing that they are serious about giving back to shareholders. To minimize dividend risk, you should opt for high-yield stocks with strong financial fundamentals. Seek out companies with a track record of consistent dividend growth, ensuring reliable income and the potential for capital appreciation. Take a moment, leave us feedback and share your thoughts in the comments. And if you found this information helpful, like, share, and subscribe to the channel. Until next time, stay financially savvy. We'll see you in the next video.